What's happening, guys? Welcome to another Sunday Scan. I'm here with Stan today, and we're going to walk you through a bunch of great topics. And so let's get right into it. We had a pretty action-packed week. We had the FOMC on Wednesday. And that was a big factor that I was watching for this upcoming week. And there's a couple reasons for that. The Fed's in a position right now where they've been on the track of wanting to cut rates into the end of the year. They've been talking about that. They've been signaling for that. But then a couple of weeks ago, we started to have some of the inflation data tick back up a little bit. And so that should have kind of put the brakes on or had them pump the brakes, but they didn't really do that in this meeting. And so this is what I consider like running a little bit hot. And that's where basically, even though inflation's not agreeing with what they're going for, they're still on the path of kind of, we want to get away from this restrictive policy and we want to start cutting rates. And so I think that the Fed's done a pretty good job over this whole, 2-year hiking cycle. But I think that they might have made a mistake with this one. And there's a couple reasons for that. And one is, like we talked about, how commodities are ramping back up. And so if you have, some regular inflation data coming back along with commodities like oil, like copper, and you have financial markets doing well, that really, those are like the big inputs into what matters day to day with inflation. And so I think that you're going to start to see that show up in some of their readings soon. And so you could either have them start to back off from their narrative, or we just have markets overheat for a little while. And that's something to take advantage of if we get a situation like that. So a couple more things about the Fed meeting is last week we talked about using the 2-year note yield to really give you clues about what the Fed is saying. And so you can see in this chart that we'll throw on the screen that you can see as soon as the Fed meeting started and they said that they were going to go through with their 3 cuts into the end of the year, you can see what the 2-year yield did, and it immediately started to go down. And so basically, as the yield goes down, that's signaling that the Fed is trying to lower interest rates sooner, and they're going to follow through with that. And so instead of having to like pick through the report and listen to Powell with everything, just watch the 2-year yield, and that can give you a clue. And so as the 2-year yield dropped, markets began to rip, and that was a sign that it was a dovish meeting, and that was really game on for a lot of that stuff. So that's a good trick to watch into big Fed meetings, and I do it with every Fed meeting. We had a couple of other things happen kind of in the macro world, and then we'll get into more of the micro or what's happening with the individual companies. One last thing I want to touch on the macro front is that there's big moves happening in the currency markets due to Japan. And I won't get into the whole background, but basically Japan is going from a period where they've had super accommodative, super easy monetary policy for a long time. They've had, negative interest rates. And now they're coming out of that because they started to get some wage inflation. And so basically what that means is that they're going to start their own, small hiking path. Even if it's going from negative interest rates to zero interest rates, that's still considered a different part of the cycle. So that can affect things like the US dollar. And we've seen, the US dollar surge a little bit in the last couple of weeks because of things like that. So it's just something to keep in the back of your mind. If we start to have some spillover from the currency markets into the stock market, that's just something to be aware of it's likely due to Japan. And so, Stan, you have a couple of great thoughts for the week. Go ahead. Let's hear what you got.
Yeah, thank you, Chris. Absolutely. There have been some great opportunities this past week that we saw. Obviously, one of the biggest one being SOUN. The trade that we discussed on Sunday videos for the past couple of sessions, it was really coming together and really playing out. We can go into a little bit more detail later on when we do some trader recaps, but for right now, SOUN was a great opportunity last week. We also had a DWAC that was a catalyst-driven event that offered a nice 10+ point opportunity as well. And then overall, the market continues, as we discussed on the previous video, of a lot of these intraday pop and drops. that we've seen, or also a lot of all-day faders have been working very well as well. As long as, of course, you respect the chart, you manage the risk properly, and then if it's not doing what you're expecting it to be doing, just size down, size out, essentially readjust the plan. Some of the ones, some more notable ones to mention were ASST, KAVL, YTEN was another one, NVFY, SMX, and we'll put up some charts and then go over in more detail in a little bit. But great market overall. I think the action continues. The liquidity is there, not as great as it was a couple weeks ago, but if you wait for the right time, right moment when the chart sets up, it's really working well. Once things confirm, fail to follow through, and you can join that side, or if you're able to catch them on the front side, that works as well. But great market so far.
Perfect. And before we get into the next section, I want to highlight the t-shirt winners. And so Technics Trader, you have won a free t-shirt, and Moths, you have also won a free t-shirt. And so email webmaster@iu.com. And then we are also giving away a free month of IU to Bella Dogs Rain Oasis. Love these names. Love the spirit. And again, email webmaster@iu.com to claim your free month. So perfect. I want to get into a little bit of a couple of things with NVIDIA and do a trade recap of one of the trades that I did this week that was good. So NVIDIA had its tech conference. It's like the Woodstock of AI. That's what it's been called. And they basically unveil a lot of new technology. A lot of other companies do the same thing. You have tech people, investors, inventors, all to get together to talk all things AI. So it was a really good week to see, what does NVIDIA have going on? They have some great new products coming out. They're basically 80% of the market share, and that market's growing fast. So NVIDIA is still in a great spot. And you got to see a couple of other companies get sorted out. And so what I mean by that is when you have an event like either earnings or an AI conference or something where you can see like, what does the next couple of months look like? That's when you start to get a lot of relative strength and relative weakness in names. And it's basically who's well positioned for the next leg of this move or the next leg of this theme. And so one of the things that I noticed is that AMD had a lot of relative weakness. And part of that is because they're a competitor of NVIDIA, and NVIDIA's unveiling all these new products that make some of what AMD is doing less attractive. And so when you get kind of a situation like that, I really like to pay attention to what's acting really strong, what's acting really weak, and then you can design strategies and setups around that. And so one of the strategies that I use this week is called just the relative weakness kind of put option strategy. And that's basically where you have a market, SPX, it might gap up, everything looks strong. NVIDIA's, ramping, a lot of the other AI names are ramping up, and you have just a couple of ones that aren't acting right. And you had AMD that was just acting heavy. It felt like, there's a fund or something that once they got this new information from the conference, they're exiting AMD and they're going to go somewhere else. And so those are the kinds of situations where the put strategy really works on relative weakness. And so you have this gap up, and then you have to pick basically a spot where you enter for the put position. And then as the market stalls or as things flush, you can really get a nice trade. So I got a double or 100% win on AMD, and it's a very low stress trade. You can control risk well. If it's acting heavy, if it's, you can feel the sellers in there. If you can risk off of a level, then that's really a good way. And I actually did a write-up to members of Investors Underground of a much more detailed way of how to go about that trade. And so if you're interested in that, I really invite you to check out Investors Underground, because we're on the Sunday Scam. We give you a lot of value, and we're going over a lot of topics kind of briefly. But if you want to see some of these things in a very in-depth way, then check out Investors Underground, because instead of just a couple of sentences on something or a minute spent on something, you'll have an entire write-up that can help you to actually learn the setup and basically put it into practice. So I just want to put that out there. And then there was another setup that I wanted to mention, and that's what I call it's a strategy with options, specifically usually 0 date options, ones that expire that day. And it's one that I use from time to time on SPX, and it's called like the last leg strategy. And so here's what I kind of describe it as. You have, 4 or 5 really core components to hold up SPX or SPY, basically the S&P 500. And those are things like financials and maybe tech. And then there's a couple of other things that really are like the core pillars holding up the market. So on any given day, if you were to look at these 4 to 5 components, you basically can see, is the market trending up? Is it stalled out because things are going different ways, or is it trending down? And so one of the strategies that I use is when the market is flat, or even if it's gapped up, but you start to see those pillars or those legs one by one start to kind of fall away. And so, you might have 4 or 5 components that are holding up the market, and then 3 of them start to head down, but the market's still staying there. And then the 4th one, drops away, and the market's still hanging on by a thread. And so what I do is then I'm watching that last leg to see if that gives out, the market almost has no choice but to flush down. And so that was a nice trade that I had on Friday using that exact strategy to get a nice SPX puts trade. And that's where SPX flushed from the mid, 52.40 something level down to the 52.30 level. And the options were so cheap, they were just above $1 or so, that if you get a 10-point move or, a 15-point flush, you can get, 3, 5, 10x on a lot of these trades while sizing appropriately for 0 dated options. So that's, again, another strategy that I'm going to be writing up in detail for IU members, just so people can really see how to put it into practice. And so instead of just taking these trades of like, oh, I think this might work, I don't really know, you can have a very structured plan and know exactly what to look for to really capitalize on it. And so those are the types of trades that I like to really take, things where I can understand what's going into it. You have your set risk, you have great reward potential, and then you have a high probability of it happening. And kind of going through these setups helps you to lower your risk, raise your reward, and then raise your probability as you're able to recognize these factors. Because what might be a 10-point flush or a 15-point flush, if you catch the right day, that might turn into a 40 or 50-point flush. And it might not happen every day, but if it happens, a couple of times a month, and you're able to recognize those setups, you can have really, really nice trades on those. And then that can basically be the bulk of your short-dated option strategies. Instead of every day trying to find something, you can wait for the right ones to use something like that. So that's all I have on the trade recaps for the week. Last thing is that we talked about FCX last week, and that was just basically the copper theme and the copper companies ramping up. And so after the Fed meeting, and you had conversations that they were going to be more dovish into the end of the year, you saw Bitcoin go nuts, you saw gold go nuts, commodities. Those are all inflationary types of assets. And so FCX ended up spiking on that. And so if you were following it closely, you could have definitely gotten a trade out of that. So a lot of great watches last week, and I think that we're going to have a lot of great watches to the upcoming week as well. So Stan, you've talked about Soon a little bit, SOUN. What else do you have?
Yeah, there's a couple of things that we can quickly go over there, Chris. So if you'd like to pull up the chart or the screen share, and then I can quickly go over some details there. So essentially, SOUN, as I alluded to earlier, this was a nice opportunity that we've been mentioning and following along for the past couple of weeks already. So we had a nice move off the twos, and then it consolidated, ripped up again, consolidated some more, and then now we're into this exhaustion area. And if you remember, SOUN, I believe some more Form 4s came out, or 144s came out. So obviously, insiders are selling some at these levels. And ultimately, what we saw last week was we had a nice exhaustion move back into this 920s area. obviously, after the tens. And then it was just every day pop for liquidity and then sell lower. I mean, they're almost literally within 20-cent increments, these liquidity pockets that we see. So great opportunity, obviously, on the longer time frame view chart. And then once the 750s, 760s level gave out, that pretty much was it for SOUN. For at least for this round. Of course, if we look at the daily chart, these are the type of moves that they have big volume, they have big extension to the upside, and then it starts to trickle lower until they find that next support level. So something like ALT, if you guys remember, this was a similar chart. C4 was another one. Obviously SHOT. These are the type of moves where they take several. Once the market is created, it takes several weeks before they eventually start to trickle back down to where they came from. But during that time frame, there are days, several days in there, and there are several opportunities that can be taken advantage of, whether on the long or short side, just depending on what your style and what you're comfortable with. That was a pretty big opportunity there last week. We also had DWAC on Friday. This was a catalyst-driven event. They had a vote or something rather into 10 a.m. And then once that came and went, it got pretty much destroyed almost immediately. And then it rechecked in with VWAP, and it remained heavy for the rest of the day. PHUN also attempted something, but that didn't really come into fruition. It was very, very little volume anyway. And then, as I mentioned earlier, also we have a lot of these intraday clear outs and all day faders that also continue to work. Some good examples we had. YTEN. This was a great trade on Thursday, I believe. Yep, right over here. Pretty much a nice all-day fade type of trade. We exhausted there in the pre-market area into the 74, 75s, and then once that failed, it pretty much remained heavy throughout the day and provided for a nice unwind. This was one that actually I was able to trade and took advantage of. So that was nice little trade there. And then we also had NVFY, which unfortunately that one I fumbled, but nice little morning clear out. Even again right into market open. Clears out, and then once VWAP stays heavy, it just continues to unwind for the rest of the day. And we also had ASST. This one had the potential for an all-day fade on Friday, or I'm sorry, on Thursday. But unfortunately, it found support at this 60 or 60, 65 line, 62 line, and it just kind of hung around there all day. But nice ranger as far as if you were able to take a trade into this area here in the morning. And as far as the intraday clearouts, SMX is the first one that comes to mind. This was a nice opportunity. Like we've discussed in the previous Sunday videos, you see the run up into it. The market loves symmetry. You see the exchange, and then it just goes all the way back down. This is one that I also traded right into this area here, and then scaled along the way. And the other one that comes to mind was OTRK, similar to SMCX. Again, not as clean, but nice little midday clear out here, and then it sort of held this previous support. So again, not as clean as SMCX, but a good range opportunity for if you were there. And as far as some of these concepts, I mean, they have been working. We're in the right market environment for them right now. The only thing is you just need to make sure that risk is respected, and obviously there's not one ticker that's worth the fight, because there's an opportunity every day, one after another, and if something doesn't work, just move on. You can try it, you can scale in, scale out, but there's no reason to fight it, because then the opportunity cost becomes too great and you end up missing some really nice layups. That's pretty much what I had for some of the trade recaps that we did last week there, Chris.
Yeah, and that's just a great point with, not fighting something, especially in a market where a lot of things aren't fighting and a lot of things are acting relatively weak and they are fading all days. And so something that I like to think about is when I'm looking for like a relative weakness trade, I might have 2 or 3 things that I'm watching, and then I might have a starter trade on something, or I might be looking, but if, 1 or 2 of those names is just not making the trade easy, move on and find something else. Like you said, the opportunity cost is too high. And so you don't want to sit there for an hour or 2 hours of just something that's not doing what you thought when other things are doing what you thought. So it's just like a good reminder to be aware of what's moving, have a couple of names that are go-tos, and then just pick the best of the best, or, in the case of shorting or with puts, the worst of the worst, because it just makes it so much easier. And so this is definitely a market where you can do that.
Right. Yeah, absolutely. Absolutely.
Yeah. And then we also had some exciting, cannabis moves this week. You had Germany basically classify cannabis as a non-narcotic. And so it's basically the decriminalization, the destigmatism, and basically moving it eventually towards, medical and then recreational. It's kind of like that process that a lot of countries go through at different stages. So, you had like Canopy Growth had some big moves on that. So we're definitely going to have some excitement in that sector. And I think that, if it just ends up being like a lot of other catalysts in the news sector or in the cannabis sector, you'll have a lot of nice fades shortly after those run. So getting into the next part of Scan, I am not a financial advisor, neither is Stan. These are not buy or sell recommendations. This is for informational and educational purposes only. And so a couple of things that I'm watching this week, Stan, if you could pull up NVIDIA, please.
Okay.
So like we were talking about earlier, NVIDIA had its, news conference, the AI conference, and they just unveiled a lot of great stuff, more output, more cost efficient. They're basically the go-to name for anything AI or data center related. So I'm definitely going to be watching NVIDIA for relative strength in the upcoming week. And I want to see what's going on with the options too, because, I think we've mentioned this a couple of times in the past, but when you have these hot sectors, a lot of times what happens is that the option market can get ahead of the actual stocks. And so if you have something that, seems so bullish, or if you have the FOMC week plus the AI news conference, the premiums get so high that even if you're right, you're wrong, because it's not worth it. They don't move enough to make the risk of options worth it. And so I think you had a lot of that last week, where the premiums were just blown out all over the place and made it really difficult to trade. But I think in the upcoming week, you might have some of those premiums come down and make it much more playable on the option side. And so I'll be looking at NVIDIA for relative strength. And then if we could put up AMD, then like I mentioned earlier, this is a name I'm looking at for relative weakness. If NVIDIA is winning and these guys are a competitor, we're at the stage of the market where, as a sector, as a theme plays out, it starts as like a rising tide lifts all boats. So AI, data centers, chips, anything like that, it lifts all boats. And then you get into the next part of the kind of move of the sector or of the theme. And that's where you separate, who are the actual winners, who's just kind of, stalling, who's the competitor that's not in a good spot. And so as you kind of have these adjustments happening, I like to pay attention to, who's still staying strong, who might be slowing down a little bit. And then, a great way to really trade these relative weakness plays is, to have them on watch, like what's the weakest name in a sector. And then if the general market dips or flushes, then you already have a go-to name to play that, because the name might be fading off a little bit, but because some other names or indexes are rising, it could have slowed it down. But if those indexes now turn down, then it's like turning on the jets to the downside. So it's definitely something that I'll be watching. In crypto land, if we could pull up MARA, this was one that I mentioned in chat. If the Fed meeting was dovish, that this would be a go-to name. And the thesis is basically things like Bitcoin or things that are inflationary assets for the most part, those run really, really hard when the Fed comes out as dovish. And so that means that, if you're watching some of these into the Fed meeting, if you're looking at the 2-year note, yields, and if you have a good idea that the Fed is actually dovish, then you can have some great trades, especially if a name like this is sitting on a support line. And so that was a really good potential opportunity this week as the Fed was, a little bit more accommodating. And so I'll be looking over the upcoming week to see if this continues to have some strength. We do have the halving catalyst coming up soon at the middle to end of April. And so many of the miners have just been hit, extremely hard kind of running into that catalyst. But something that I mentioned on one of my watch lists in Investors Underground is that, markets are forward looking. And so they don't have to wait until the actual catalyst arrives in order to change something. And so if Mara and all these other names fell by 30, 40, 50% into that catalyst, and now we're a month away, that might already be priced in, and we might be past that at this point. If the market's looking 2, 3, 4 months out, and now the miners are stable, essentially for the next 4 years after that halving event, you could have some relative strength come back in, and especially if things like MSTR or coin, if there starts to be some rotation maybe away from those or with those and back into miners, you could have some good moves. And if miners stay weak, like MARA, then you could definitely have a relative weakness trade go back on. So a few more things I'm watching are NKE. And we've seen this theme of a lot of these companies that have strong ties to China and they're dependent on their growth, they're getting hit hard. And part of the reason is because China is slow. And so, if you have like a sector that has historically been a big growth area for a lot of these companies and now it's just lagging, and so if companies like Apple or Tesla or Nike, if they're being hurt by that, you could have a relative weakness theme. And so especially if the general market starts to turn down a little bit, those are going to be some go-to names that I'll be looking at. And then finally, if we could put on FCX, this was the copper play, and we started to see some longer-term options get bought in this several months out, very bullish activity. And, we're around a resistance level and we're starting to peak above that and actually base above that. And so I think that as long as the markets stay up, as long as copper keeps going, that this could be a really good potential play for a breakout. And so those are the main things that I have on my watch list for the week. And I'll give more detail in Investors Underground, again, including specific strategies to play some of these ideas that we're talking about, because I want to really help people to understand, not just, this could have been a potential trade, but what day could this have been a potential trade, at what level, and in what vehicle is the best vehicle to play something like that. So we're going to be getting a lot more granular with that kind of content. So I hope that you check out Investors Underground to see that. And then over to you, Stan. What are you watching for the week?
Oh, sure. So I have several watches. I'll start with coin since I know you just spoke about it, so while it's fresh. For me, ideally for coin, right? This was nice little setup here on Thursday, I believe it was. Yep, Thursday. As something that we always touch upon, the daily clear out, either on the daily time frame view, as we saw here into the 270s, or even intraday, we actually saw coin do that as well. And from that point forward, it was a pretty nice opportunity. So right here, we had this intraday high that was put in at 276 and some change, and then we literally cleared it by 3 to 5 cents. And then from that point on, the fall through setup was really clean versus this 272 staying heavy. So ideally for me, what I'd like to see is, obviously market permitting and agreeing, I would like to essentially fade any pop that fails. Anything versus this 250s, 255s area, if that stays heavy, I think we could see a short-term unwind back into maybe low 200s or so, give or take. But again, it's an opportunity that I will take if it provides the right level for scaling. On Friday, we had some trouble there with the 260s. And then, as I mentioned, ideally over the next couple of days, we see some sort of a pullback there into this demand zone here in the low 200s. That's going to be something that I will be watching. The next one that I have on watch is SOUN. SOUN, again, obviously, it's not something that would be an easy, this is not something that I'll chase. Again, keeping the bigger time frame in mind, once the market is created, it's generally not a straight shot down, right? You have these liquidity moments in between the perpetual selling. And that's where the edge is. That's where the opportunity is, not necessarily chasing this on the way down. But with SOUN, any pops I'm interested in. I mean, anything versus the 750s, 760s would be great. Obviously, not sure if we'll get that. But that, for me is a very important level. But ideally, any sort of pops next week that remain heavy will continue to be of interest for me. So anything versus 640s, 650s level, anything like that, I would like to scale into if the trade approves. The next one that I have on watch is CGC. And CGC, that's, Chris, as you mentioned, we have some catalysts going around, some news going around. But CGC is one of those where it could be just like SOUN, it could be just like ALT, SHOT, C4. It's that type of a chart, right? It has the volume, it has the liquidity when it runs. It has the shareholder user base that it follows the type of pattern that we've seen previously with some of these SHOT and C4, ALT, etc. type of charts. So this is what I'll be looking for CGC. Any sort of exhaustion moves, ideally we get a big gap up and then exhaust and then look to scale into. But again, given that there's a catalyst, there's news, this is not a name that you want to fight. This is something that you want to take advantage of the opportunities, either when the backside is put in or when you have some sort of a major gap and exhaustion move to where you can shift the odds onto your side. But I'm really happy with CGC coming into play because, again, it's that type of a move where they create a market and then it lingers along for a little longer. But while it's lingering, it offers opportunities almost daily. You can find something in there. So big move on Friday. Just a steady move higher. Ideally this would have been a good good long if you're good at that stuff. But unfortunately, for me, it's not something that I like to participate in on the front side. So right now I'm in this information gathering mode, and the higher it goes, the better, ideally. But coming into next week, any sort of gap up and exhaust will be of interest. Obviously, this sevens level has been, has proven several times here. So, that will need to change. But again, I think we're in the early stages of the move, and we'll be cautious with the sizing unless we get the major gap in exhaust move. So CGC, that will remain on watch for the foreseeable future. And then I have a couple of back burners. This on the small cap side, this KAVL. To me, it could be a potential of a liquidity trap forming. Obviously, we had a nice 97.5 million volume day here on Thursday, and again, this should look familiar. Again, it's something that oftentimes you may see it as referenced as the clear out day or as the positioning day. But you have this nice little gap up, and then goes and it clears out intraday, and then it fades back. So if you wanted to sell, you would have sold. If you shorted, you shorted. And then here we are the following day. The volume goes down to from 95 million down to 1.6 million, and the price is holding relatively well. So this will be on watch for a potential liquidity trap setup, maybe a squeeze out, and then either look to join the front side on the long side, or wait for the back side and then move on from there. And last but not least, again, I had some back burner plays, and back burner plays for me are essentially the higher the better. Some failed to follow through momentum. We'll have this. Let me put it in a 15-minute, and then OTRK. Again, any sort of higher better type of move. If we exhaust into the 40s, 50s, that would be ideal. We have ASST. This if higher to better, and ideally it's sub 60s. NVFY, similar, higher to better into the 310s, 330s ideally, and then look to fade it into the mid to low twos. And last one is GOEV. Just monitoring this one. Obviously, it's got a nice little uptrend so far. So I just want to be there for the day where VWAP stays heavy. And that's about it. That's pretty much what I have for next week for the main watches, Chris.
Excellent. And then if we could just throw up CVNA, because I know that last week, we talked about basically it's staying in this channel. Mm-hmm. And then, when it starts to get to the upper end of that channel, that's when you can look for more upside. And if it got to the lower end of that channel, then you could look for more downside. And so, along with the Fed and kind of inflationary assets, one of the things that tends to go in hot markets are squeeze stocks. So things with high short interest, things that are usually not very fundamentally sound, but the market likes them. They know that they have a history of running. So we mentioned that the option activity longer term was not as bullish as it previously was. But if you start to have some shorts start to cover a little bit, if it starts to hold a base, that could be a reason for that option activity to come back in. And so these aren't broad calls that like it stays the same all the time. You have like these different factors that are constantly adjusting to what the market's doing. And, you now have a set of circumstances that could make this more bullish than it was before. And if something changes, if the Fed walks back their comments, if the market sells off, then that takes away some things that were holding it up. And so, again, having a plan for either scenario and just looking at what are the key drivers, what are the key variables, and then using that to craft your trade plan. Those are really beneficial things to help people who are trying to trade things like this.
Right. Yeah, no, absolutely. Great call there, Chris. CVNA right into that $10 channel, and now looks like we're trying to hold it. So it's working out as we've been following it along, and it's good to keep it on radar, I think, throughout the videos, so then we can put it all together once it's all said and done.
Definitely. And what I like to do, just as a last bit on this, is when something's kind of been grinding up for a while, or when like the same things have kind of been in play, look for something to significantly change. And that will be a tell of when the stock will change. And so if it's been kind of grinding, holding levels, but the volume's been, pretty much the same for a while, you haven't had any like real big moves. So if you start to have a big change in volume, that could be a tell that the stock's going to move. If you have a big change in the option activity, that's a tell that the stock's going to move. If you have a big change in the general market, that's a big tell that something can move. So try to identify what are the things that if they start to rapidly change, they would have an impact on something like this. And so that's what I keep in the back of my mind when I'm looking to kind of set up trade plans. And I think that can help some people if they adopt that.
Very nice. Absolutely.
Great. Okay. Well, thank you everyone for watching. It's been a great time with Stan as always, and we'll catch you next week. Remember to like, subscribe, and comment either your key takeaways or kind of an aha moment from one of these scans, and we will hook up someone with either t-shirts or a free month of Investors Underground. So have a great week, everyone. And Stan, thank you as always for joining me.
Absolutely. Thank you, Chris. Have a good weekend, everyone.